Welcome to InsureSavvy. Let's talk retirement. Is there a tiny, nagging voice whispering about financial worries? That worry is incredibly real and you're not alone. People are living longer, which means more years to fund. Medical costs are always trending upwards. Let's be realistic about what modern retirement looks like. Ignoring retirement planning bites back. It's a high-stakes gamble where the odds are not in your favor. The sooner you start, the less terrifying it becomes. Cruise into retirement with a robust financial safety net. That's why we're here on InsureSavvy, your guide through the financial maze. Our mission is to arm you with knowledge and confidence. Our goal is to make you feel empowered, not overwhelmed. Let's dive in and build a plan that will make your future self grateful. So what is this retirement insurance thing? It's like a financial justice league, designed to protect your golden years. This includes health insurance, long-term care insurance, and annuities for a steady income. Retirement should be a period of joy, not anxiety. Retirement insurance creates a robust safety net. It battles those gremlins of unexpected medical bills and outliving your savings. It cushions blows from the stock market, offering stability. We'll explore different types of retirement insurance, figure out your needs, and discuss practical strategies. By the end, you'll be an InsureSavvy pro, securing that awesome, worry-free future you deserve. Let's get started. All right, Team InsureSavvy, let's dive into retirement insurance. Retirement insurance isn't a mythical beast. Think of it as your personalized financial toolkit, designed to tackle specific challenges. The core idea here is all about proactive planning, putting safeguards in place to ensure a smoother ride later. It's about giving your future self a massive high five for being so darn prepared. Designed to protect various aspects of your life post-career, making sure you have access to quality healthcare without it bankrupting you. Retirement insurance is a multifaceted approach to securing your financial well-being. Thinking about retirement insurance isn't just a task for folks who are on the immediate cusp of retiring. The earlier you start incorporating them into your long-term financial plan, the better. The second best time is right now. Consider it an investment in your future peace of mind. Retirement insurance is like a well-stocked utility belt. Let's explore the star players, the big three defenders of your retirement: health insurance, long-term care insurance, and annuities. Each has unique powers, forming a formidable barrier against financial risks. Understanding each one is key. Health insurance is tailored for retirement, like Medicare. Long-term care insurance covers services if you can't perform daily activities. Annuities provide a guaranteed income stream. It's a contract for regular payments now or later for a set time or life. This combats the fear of outliving your savings. These components build a comprehensive retirement insurance shield, working together for layered protection. You're becoming more InsureSavvy. Secure your financial future and make your retirement dreams a reality. We've covered the basics of retirement insurance, but what's the real value? It's peace of mind, knowing you've protected yourself and your loved ones from life's biggest financial curveballs. Imagine enjoying retirement, traveling, hobbies, time with grandkids, without worrying about medical bills or outliving your savings. A solid plan turns what-ifs into "I've got this." Insurance isn't just about money, it's about freedom from anxiety, letting you truly enjoy your retirement. It also helps you maintain your lifestyle, shielding your savings from unexpected expenses and inflation. Plus, it safeguards your legacy, ensuring your hard-earned money supports both your well-being and the next generation. That's the true value: security, confidence, and the ability to live and give on your terms. Let's face it, healthcare costs are the monster under the bed for retirees. Medical expenses rise faster than inflation, and even Medicare leaves gaps. Think prescriptions, dental, vision, and especially long-term care. One major illness can devastate your savings, forcing impossible choices between care and financial security. Chronic conditions add a steady drain, eroding quality of life and limiting your options. The fear isn't just about a single bill, it's the ongoing pressure that shadows your retirement dreams. Understanding this pain point is the first step to fighting back. On InsureSavvy, we'll show you how to tame this beast. Let's get you protected so you can focus on living, not worrying. Living longer is great. More birthdays, more memories, but it brings the longevity paradox. Will your money last as long as you do? With pensions fading and life expectancies rising, the burden falls on your savings. Many retirees live in fear, rationing every dollar and missing out on the joys they've earned. It's not just about surviving, but thriving, maintaining comfort, independence, and dignity for decades. The real risk isn't running out of money, but running out of quality of life. That's why robust insurance strategies, especially those with lifetime income, are essential. Let's make sure your money keeps up with your years. Market volatility and inflation, the 1-2 punch threatening your retirement. A market downturn just as you retire can shrink your nest egg fast, while inflation quietly erodes your purchasing power year after year. Even small inflation rates can have your money's value over a long retirement. The result? Stress, uncertainty, and the risk of your plan going off the rails. You need strategies that balance growth with protection, so your savings last and your lifestyle doesn't shrink. Ignoring these threats is like walking a financial tightrope blindfolded. We'll show you how to build stability and inflation protection into your plan. Don't let these silent threats steal your peace of mind. Gone are the days of guaranteed pensions. Now most retirees must turn a lump sum into lifelong income. This shift puts the pressure on you to manage withdrawals, investments, and uncertainty, often leading to stress and second guessing. The need for predictable, steady income is universal. It's what lets you budget, plan, and sleep at night. Without it, every market dip or unexpected expense feels like a threat. That's why solutions like annuities are gaining traction. They offer a reliable income floor, no matter how long you live. People want more than a pile of money. They want security and peace of mind. Let's explore how to create that dependable paycheck for your retirement years. Let's tackle retirement healthcare costs. Medicare is the cornerstone, but it's not all-encompassing. Think of Medicare as the foundation. Part A covers hospital stays, Part B covers doctor services, and Part D covers prescriptions. Supplemental insurance, or Medigap, fills in the gaps in Medicare coverage. A health savings account, HSA, offers tax advantages for medical expenses. Be proactive, research your options, and understand what's covered. Careful planning protects your health and savings. Long-term care is an important but uncomfortable topic. Regular health insurance and Medicare generally don't cover extended long-term care services. Long-term care insurance can help cover costs associated with care services at home, in assisted living, or in a nursing home. These costs can be astronomical, potentially decimating a lifetime of savings. LTC insurance provides a daily or monthly benefit, protecting your assets. It offers financial protection, preserving your nest egg, and preventing loved ones from becoming full-time caregivers. However, premiums can be expensive and increase over time. Consider your family history, finances, and preferences, and seek professional advice. Apply when you're younger and healthier for lower premiums. Remember the pain of a missing paycheck in retirement? Annuities can be a solution, creating your own personal pension. They provide predictable income that lasts. It's a contract with an insurance company. You give them money, and they make regular payments back to you. Payments can last for life, addressing the fear of outliving your money. This provides a baseline of income to cover essential expenses. Immediate annuities pay out quickly. Deferred annuities start later, allowing growth. Fixed annuities offer guaranteed rates. Focus on securing peace of mind. Scrutinize fees and understand charges. Annuities can be a valuable part of a diversified retirement plan. Now let's talk about protecting your precious nest egg from that wild market roller coaster we discussed. One of the most tried and true strategies to manage investment risk, especially as you approach and enter retirement, is diversification. You've probably heard the old saying, don't put all your eggs in one basket. Well, that's diversification in a nutshell. It's about spreading your investments across various asset classes, like stocks, bonds, real estate, and cash, that tend to behave differently under different market conditions. The goal isn't necessarily to shoot the lights out with returns, but to create a smoother, more predictable ride for your portfolio, cushioning the blows during market downturns. Think of it like building a well-balanced meal for your finances. You wouldn't want to eat only dessert, right? Okay, maybe some days. Similarly, you don't want your entire retirement savings hitched to the fortunes of a single stock or even a single sector of the market. If that one investment goes south, your whole plan could be in jeopardy. By diversifying, you're acknowledging that some investments will zig while others zag. When stocks are soaring, your bonds might provide more modest returns, but when stocks take a tumble, those same bonds can act as a stabilizing anchor, helping to preserve your capital. It's this balancing act that helps reduce overall portfolio volatility, which is super important when you're relying on that money to live on. So, how do you actually go about diversifying? It involves looking at different types of assets. Stocks or equities offer the potential for higher growth, but come with higher risk. Bonds or fixed income securities generally offer lower returns, but are typically less volatile and can provide a steady stream of income. Real estate, whether it's through direct ownership or real estate investment trusts, REITs, can offer inflation protection and income. And holding some cash or cash equivalents provides liquidity and a safety net. Within these broad categories, you can diversify further. Different types of stocks, large cap, small cap, international, different types of bonds, government, corporate, short-term, long-term. The idea is to build a portfolio that reflects your risk tolerance, time horizon, and income needs. As you get closer to and enter retirement, your asset allocation strategy often shifts. While growth is still important to keep pace with inflation, capital preservation and income generation usually become more prominent goals. This might mean gradually reducing your exposure to riskier assets like stocks and increasing your holdings in more conservative assets like bonds. This isn't a set it and forget it deal, though. It's wise to periodically review and rebalance your portfolio to ensure it stays aligned with your goals, especially after major market moves. Diversification won't eliminate all risk, nothing can. But it's a cornerstone of prudent investing and a powerful strategy to help you navigate market volatility with greater confidence and protect that nest egg you've worked so hard to build. Our final strategy in this section is all about fighting that silent thief of retirement dreams, inflation. Remember how it slowly eats away at the value of your money, making everything more expensive over time? Well, we need some kryptonite for that particular villain. One effective tool to consider including in your diversified portfolio, specifically designed to combat inflation, is Treasury Inflation Protected Securities, or TIPS for short. These are a special type of U.S. Treasury bond, and their superpower is that their principal value is adjusted with inflation, as measured by the Consumer Price Index, or CPI. This means your investment can keep pace with rising prices, helping to preserve your real purchasing power. Here's how TIPS work their magic. When you buy a TIPS bond, it has a fixed interest rate, also called a coupon rate. However, unlike regular bonds where the principal stays the same, the principal of a TIPS bond goes up with inflation. So, if inflation rises, the principal value of your bond increases. And guess what? Your fixed interest rate is then paid on that new higher principal amount. This means your interest payments also increase. Conversely, if there's deflation, which is rare but possible, the principal can decrease, but you're protected from losing your original investment at maturity. So, they offer a pretty nifty way to directly hedge against the erosion of your savings due to inflation. Why are TIPS particularly relevant for retirees? Well, if you're living on a fixed income or drawing from savings that aren't growing faster than inflation, your ability to afford the same lifestyle will diminish year after year. Think about healthcare costs, which often rise faster than general inflation, or even just the everyday cost of groceries and utilities. TIPS can provide a degree of certainty that at least a portion of your portfolio is directly linked to these rising costs, helping your income and assets maintain their real value over the long haul of a potentially 20 or 30-year retirement. They can be a valuable component in the bond portion of your asset allocation, offering a more conservative way to protect against this specific risk. Now, TIPS aren't a perfect solution for everything, and they have their own nuances. Their market value can still fluctuate before maturity if interest rates change, just like other bonds. Also, the inflation adjustments and interest payments are subject to federal income tax, though they're exempt from state and local taxes, so holding them in a tax-advantaged account like an IRA can be beneficial. You can buy TIPS directly from the U.S. Treasury at treasurydirect.gov, or through mutual funds and ETFs that specialize in them. The key takeaway here is that inflation is a real and persistent threat to your retirement security, and incorporating strategies like TIPS can be a smart move to help ensure your money keeps its oomph for many years to come, allowing you to enjoy your retirement without constantly worrying about rising prices. InsureSavvy champions, let's hear it from certified financial planners, or CFPs. These pros help people navigate retirement planning. Your retirement plan needs to be unique. It's about your situation, goals, and comfort level. A CFP is like a master baker, helping you understand each ingredient. They'll dive into your financial picture, gauge your risk tolerance, and pinpoint vulnerabilities. CFPs help make sense of complex insurance products. A good planner will cut through the noise and explain the pros and cons. They're crafting a solution tailored to your puzzle pieces. Timing is everything with insurance. Financial advisors help map out a timeline and figure out coverage amounts. This expert guidance can be the difference between a plan that looks good and one that delivers peace of mind. Seeing how retirement insurance plays out in real life can really make things click. Let's talk about a couple of hypothetical InsureSavvy viewers who nailed their retirement insurance planning. First up, meet Sarah. She started early, worried about rising healthcare costs, maxing out her health savings account. She researched Medicare and Medigap options early. Sarah allocated a portion of her savings to a deferred income annuity, guaranteeing income starting at age 80. Now let's meet Tom. Tom started later, concerned about market volatility. He purchased an immediate fixed annuity, covering his basic living expenses. He also explored hybrid long-term care policies. These choices gave Tom the confidence to enjoy his retirement. We've explored retirement insurance. So what's next? It's time to get personal. Give your current retirement plan a thorough assessment. A state of your retirement union address you give to yourself. When we say assess, we mean really dig in. Pull up those account balances, all of them. Then start asking some real questions. What are your actual retirement goals? Start to identify potential gaps. This assessment must include a deep dive into your current insurance situation. The goal here is clarity, pure and simple. This is your starting line for taking powerful, informed action. This honest evaluation is the bedrock upon which you'll build a truly resilient and effective retirement insurance strategy. You got this. You've faced the numbers and identified potential gaps. Seriously consider seeking professional financial advice. A qualified financial advisor, especially a certified financial planner, can be your expert co-pilot, helping you navigate the complexities. They're trained to look at your entire financial picture and see how all the pieces can work together most effectively. Think of them as your personal financial strategist, dedicated to helping you build that secure and joyful retirement. Never stop learning. The world of finance isn't static, and your needs will likely evolve over time too. Committing to continuous education empowers you to ask smarter questions and make better decisions. Keep seeking out reliable sources. The more you understand, the more confident you'll feel as you build your path to a secure retirement. Keep learning, keep growing, and keep being savvy. So we made it. Retirement insurance. Woo, what a ride, huh? We hit the big pains, like healthcare costs, yikes, and living super long. But also real solutions. Smart strategies totally exist. You can build that security. Future you, so ready to thank you. Hey, this video, was it helpful? We hope so. If yes, smash that like button, please. If no, the dislike button is okay too. Seriously, let us know, all right? We genuinely want to improve for you. Share this with your pals who need it, and definitely hit subscribe for more awesome InsureSavvy content. Got a burning question, or even just a tiny one? Pop it in the comments section. You know, right down there. We read every single one. Scout's honor. And we will get back to you. Promise. You, our amazing audience, are why we're here. You are our absolute top priority. Always and forever, no kidding. So go on, ask away, friends. Need more top-notch info? Of course you do. You're savvy. Dive into the description box below. We've packed it with links to great resources like from Kiplinger and other super useful tools. You're officially InsureSavvy now, folks. Go out there and plan that dream. Secure your fantastic future. You've totally, absolutely got this.